Hello everybody. Here I am again with some slight or nice remarks or unimportant remarks, I do not know, on business taxation. So this is a continuation of the introduction to business taxation. And what I'm talking about now is just some terminological basics. So some important terms which you already know from last semester. The chapter just aims to remind you of certain technological terms or technical terms, what they stand for, and the learning outcome should be that you can avoid to make a bad impression when you mix up all the different technical terms which there exist in the field, and so just listen. So the first important thing is using the right terms matters, because if you mix up all the important expressions, then probably people think you can't keep apart all the basic stuff. You mix everything up, and that is creating a not a good impression, a very bad impression. It damages your reputation, so try to avoid it. When do we speak of profit? You know, profit is the name for the equation revenue minus expense. It's the rest from that. Revenue is the term which we use for a positive component of your income, or the positive component of the profit. So an increase of your property, which is not compensated by an increase of liabilities. So your net property goes up, or to say it plain and simple, you get richer. Expense is the name for the negative component of profit. So a decrease of the property, which is not at the same time compensated by a decrease of liabilities. So it's not a decrease of cash in order to get rid of credits. It's just a decrease of cash and nothing else is which makes the thing more comfortable. So money is gone, you get poorer, or something else is gone, you get poorer. Expense is just your property goes down. So this is plain and simple what it's about. Income is also a term which designates the difference between revenue and expense. Nevertheless, income and profit do not stand for the same things, because in German tax law, profit is the special term for the income from businesses. So for the first three types of income: income from business, income from agriculture and forestry, and income from self-employment. Here, income from business, you remember that was the second type of income. It's a basic type or general type, and income from agriculture and forestry or self-employment are two special rules which deviate from the general rule. So everyone who is his own boss or her own boss has in principle income from business, and if you then qualify for agriculture or for self-employment, then that special rule replaces and overrides the business rules there. So three types of income, but all the same stuff. For all the remaining other types of income, so numbers 4 to 7, the income was called surplus of revenue over expense. So using the terms profit and surplus also implies a message about the underlying types of income. So do not get it wrong. Do not speak of surplus when it comes to businesses. Do not speak of profit when it comes to employment. So what we have is income is the general overall term and consists of profit if you speak for types of income number 1 to 3, or surplus if you speak of the remaining types of income 4 to 7. Income is nothing else than an increase of your property, and income is the result, the difference from revenues and expenses. Revenues is everything which increases your property. Expenses is everything which lowers your property. To say it plain and simple, you get richer or poorer. For the different components of the profit, revenues and expense again, you have also some differentiations in the terms. Revenue and expense are the overall terms. If you go to the types of income numbers 1, 2, and 3, then we speak of business revenue and business expense. This term is only used when you have to do with the business types of income, so 1, 2, and 3. Business, agriculture, self-employment. For the remaining types of income, you must call these two elements differently. For the non-business types, so for employment, income from capital, lease and rent, and other income, you just speak normally of revenue when you mean the positive element. And when you speak about expenses, you usually want to convey the notion that something can be deducted from the income because it's related to income generation, to generating income. So it would be usually qualified as or named income-related expenses. So here again, we have the terminology that a revenue is either a business revenue or a simple revenue, depending on the type of income. And expense is either business expense or income-related expense, depending on the type of income. Then, sometimes you have a general rule when expense can be deducted, or mostly you have it, or sometimes you have just a deviation from a general rule that something cannot be deducted, and then one sometimes speaks of an allowance. That is not very frequent in German law because we have many things done with general rules, but sometimes the term allowance still might be convincing. For example, what we translated as special expenses or extraordinary expenses would probably be better designated, a bit more complicated, but more precise and more easily understandable for others as special personal allowances, which says, okay, here you can some personal expenses, you can deduct them by deviation from a general principle from your taxable income, or even personal allowances for extraordinary hardships, which would be the better translation for extraordinary expenses, would be the literal German term. That makes sense. So allowance rather implies that you deviate from a general rule which says you should not take that into account, but by special permission, the law says you can put that into the computation. So here we could say an allowance is probably a good idea to speak of an allowance if you deviate from a general principle and say something can be deducted from the income. Examples would be the special personal allowances, in German Sonderausgaben, often translated more simply as special expenses and more literally, or personal allowances for extraordinary personal hardships, extraordinary expenses, or in German außergewöhnliche Belastungen. Now, there are also terms which I saw that beginners very often mix them up. So, deductible, non-deductible, taxable, and tax-free. How to keep them apart? Well, it's plain and simple. You must first strictly keep apart what's deductible and taxable. The idea taxable means something can be taxed. Okay, so you can only tax positive elements. You cannot tax money which is not there. So only revenue can be taxable. Okay, so things which increase the income can be taxed. Nothing else. That's plain and simple. So never say expenses are taxable. Impossible. You can't tax what is not there. Expenses is money which is gone. From this, you can't levy a tax. Now, sometimes you earn money and the state says this is not taxable, or they renounce on a tax claim. So in that case, that revenue is tax-free. Clear. Now, on the other hand, the same also exists from time to time with expenses. But never say that an expense is tax-free. Makes no sense at all. So there we use just a different term. The idea is tax-free can only be revenue. That means it could be taxed, but we don't tax it. Well, so tax-free only applies to revenue. So what we have is the idea that you have business revenue, 10,000, for example, then another revenue, 20,000, then 25, then you have a total taxable revenue of 55. And as this all has been taxed, taxable, 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 and the result is the total taxable revenue. Now, what if parts of the income are not taxed? Well, then we have the same business revenue, business revenue, business revenue. You have a total. But then, special order, ignore the third thing. So you ignore it. It will not be taken into account when you add up the taxable revenue. Instead, it's tax-free, and your total will only be that which is taxable. So, by the way, not 35,000, but 30,000. Here you see, okay, why I have not ended up as a mathematics teacher. So 30,000 naturally is the total here because the last business revenue was tax-free. The same now applied to expenses. Well, expenses are not taxed. When it comes to expenses, the only question is, well, I earned a revenue of, let's say, 35,000, and now my expenses lowered my income, so I can subtract them from the total of the revenue. I can deduct them. So revenue is naturally deductible. It can be subtracted. So that is the idea of the term deductible. So revenue cannot be deductible. Expenses can be deductible. Negative elements are deducted, subtracted from the rest. Huh? Oh, should be clear. Now, sometimes you also have a term which is called non-deductible expense. That means sometimes tax law says, yes, I know you made an expense. It was also caused by business, so it is a business expense. You remember that from the first semester. But you are not allowed to deduct it from the taxable revenue. It will be ignored for tax purposes, although it was a business expense. In that special case, that expense is a non-deductible business expense because you are not allowed to deduct it from your taxable revenue. It shall be ignored. That is non-deductible. One of the examples would be if you pay a bribe to a politician or pay a bribe to somebody in an authority, or you bribe a competitor's employee or so. That would be a criminal offense, and you can not deduct it from the income because although it was caused by business reasons entirely, you are not allowed to bring that into account when you calculate your taxable income. So you will have to pay that payment from your taxed net remaining income after tax. So that would be not deductible. So here we have, to illustrate that, for example, a total from all the revenues, 35, minus the first business expense, 5,000, you can deduct it. It lowers the income, so it's deductible. Business expense, 25,000. And now, why is it less? First, it's taxable. Second, you are allowed to deduct expense 5,000. And now let's say 25,000 was a bribe to an employee of a competitor, so highly immoral and forbidden, and also forbidden by tax law. You think it's deductible? Yes, in that case it is, but in the next case where you have some special rules which say, oh, forbidden for tax law, now it's non-deductible, so you have to ignore it, and then naturally you end up with 30,000 only because the 25,000 have been made for business purposes, but they were not deductible. This is just this. A last aspect, very often I also found out that people do not know how to use the terms gains and hidden reserves. So just to illustrate that, gains is a special term for profit made by selling assets, especially non-current assets. So fixed assets, things which you bought for your own firm. Let's say a factory building, a piece of land where you produce on, not your trading stock, but property which you used for own purposes. So revenue obtained from the sale minus cost of transaction minus the remaining book value of the good which you sold, that is the gain. So the difference between the price which you get and the costs which you still have in the books for it. The word capital gain is a synonym for that. It has no basic different meaning from gain. Hidden reserves is, on the other side, on the contrary, the difference between the market price on the relevant day minus the book value. So the hidden reserve is also comparable to gain. It is the gain which could be made on the special day. So the difference between the market price minus the book value under the condition that the sale has not yet been made. So that is the gain which you could make on the day. Market value minus book value. It's called hidden reserves because in the books you only see the book value. You don't see the market value. So that is a potential gain which you could realize by selling things, but it's still hidden between the lines, and that is why you call this a hidden reserve. Has nothing to do with that you want to hide it. It's just hidden by accounting principles. You don't see it. Well, that's the reason why traditionally it's called hidden reserve. It's a bit confusing, but just accept it. That's a technical term. So hidden reserves refer to things which have not yet been sold, but a gain could be made. Good. So if you have a piece of land, for example, with a book value of 100,000, for example, the cost of acquisition and today's market price is 500,000, then the difference of 400,000 is the hidden reserves contained in that piece of land today. Relatively simple. Good. When you once have sold good, then it's no longer in the books, clear? And it's no longer a hidden reserve because it has now become evident. You see then, I got a price of 500,000, I booked out, de-recognized my piece of land of 100,000, and I made a gain of 400,000. So hidden reserves no longer exist when the asset is gone, because a realized gain can no longer be a hidden potential gain, a hidden reserve. So the names for the difference between the market value and the book value differ. If the gain has been made, then it's a gain. And if the gain is just a potential gain and you have not yet sold, then it is a hidden reserve. This is enough for today. See you again soon. And a last reminder, naturally, to all of you who perhaps only view internet videos at the moment, it will not be able to have enough success without trying the buffalo approach, which is a German expression for learning very, very hard. So do the buffalo, or es mit Büffeln versuchen, is a standard recommendation for students. So try to learn very, very hard. It will be necessary. We will test everything in an exam with cases, and questions, naturally. But that's enough for the introduction. Goodbye for today. See you again soon. It was a pleasure for me to talk your ears off. Hope to see you again soon, and enjoy the rest of the day. Thank you very much. Recommend the channel. Press a like button. Perhaps that improves the reputation of the channel. And if you have one or two acquaintances which you really don't like, recommend the channel to them with strong recommendations that they have to view it. If you have friends and you enjoyed the video, then recommend the channel too. Thanks and